Good morning, students. As you know, any businessman prepare accounting books, and we have learned he enter all the daily transactions in journal. After that, they prepare. After that, they prepare ledger, and after ledger, they prepare trial balance. After preparing trial balance, they want to know what is the real position of their business, or they should know with the help of this chapter. The name of this chapter is financial statements. What is the actual position of their business? Not only this, they earn profit or loss in the end of the year. Okay, so today we will discuss what is financial statement, and this is the 21 chapter of your book. So students, financial statements refer to such statements which report the profitability and financial position of the business and the end of the accounting period. Okay, so students, we should understand what does profitability mean. Any businessman in the end of the financial year wants to know he earned profit or he suffered loss. Okay, if he earned profit, what is the amount of that profit? How much profit he earned? Or if he suffered loss, what is the actual position of loss? So, if any businessman wants to know profit or loss at the end of the financial year, he will prepare financial statement. Okay, and actually, to know the profitability of the business, he will prepare income statement. He will prepare income statement. And what is the income statement? If he wants to prepare income statement, he will prepare trading and profit and loss. We will learn one by one when we do the questions. Okay, now that businessman wants to know the actual financial position of his business. At that time, he will prepare balance sheet. So you will prepare trading account, profit and loss account, and balance sheet. All these accounts, three accounts will be prepared in financial statement. How we will prepare trading account, profit and loss account, and balance sheet? We will understand when we will do the chapter. Okay, now what are the objectives of preparing financial statement? One thing more you should understand, the students, that trading account and profit and loss account and balance sheet, three accounts, total three accounts are also known by the name of financial account or final account, we can say. So, what are the objectives of preparing financial statement? The first objective of preparing financial statement is to present a true and fair view of the financial performance. What is the financial performance? By if he knows what the profit is or what is the loss. Profit or loss is known by the financial performance. Okay, to present a true and fair view of the financial performance means he earned profit or he suffered loss. The second point is to present true and fair view of the financial position, means how many assets are there in his business and what are the liabilities of the business at the end of the year. Okay, now students, we should also know that what is the need of preparing financial statement we have discussed, but who will see the financial statement? Users of financial statements are actually the management of the business organizations, investors, short-term creditors, long-term creditors, employees and trade unions, government, taxation authorities, and other users are there who want to see, who want to examine the financial statement. These are the users. Okay. Now we will discuss one by one. First of all, management. In any organization, management wants to know the actual position of the business. Okay. If the management will see there is any type of difficulty in earning the set object, means great profit, at that time, after examining the financial statement, he will reduce all those things. He will cut off all those things that are affecting the profitability. Okay. And what is the requirement in the business? The management will know by studying the financial statement. And the second point is investor. Any investor wants to know before investing the money what is the actual position of the business, what is the future of that business. After examining the financial statements, they will know, and we should understand very thoroughly that they can assess the short term and long term financial statements, and earning capacity they will know with the help of the financial statement. They can also study the trend of sales, trend of profit, shortcomings, and the prospects of the future growth of the enterprise. After that, they will become ready. They will be ready to invest money in the business. If they found all the things are not according to them, at that time they will not get any interest to invest the money in your enterprise. Now the third point is short term creditors. On the basis of financial statement, the short term creditors will assess whether the enterprise will be able to pay their debts when they fall due. Means if they gives if they supplies the goods, and whenever they need the money, whenever the maturity date comes, at that time, what is the position of the enterprise? Can they be able to pay the amount on the maturity date? They will study with the help of the financial statement. In this way, in the same way, long-term creditors will also examine the financial statement, and they will also know the actual position of the business with the help of financial statement. Whether the enterprise will be able to pay the interest consistently, because they will provide a long-term loan, so they will charge interest. Whether the company will be able to pay their debts when due. On the basis, they may also decide to extend, maintain, or restrict the loans extended to the enterprise. Okay? So we can say short-term creditors and long-term creditors both examine before giving any type of credit to the organization or enterprise. Employees and trade unions is the next point. On the basis of financial statements, they can judge as how much bonus and increase in their wages is possible from the profits of the enterprise. Students, it is very important. Whenever employees and the unions of the employees will see the financial statement and examine if their company, their organization is earning a lot, it means they can produce their demand for the increment, and if they want to increase their wages, they can request the management. If there is not so much profit or the company or organization is suffering, at that time they will not make any type of request for increment. And yeah, and if they want to make any type of demand, they can stop until the company gets profit. Okay. Now the sixth point is government. Government uses the financial statements to study the profit margin of various industries, to announce or withdraw various concession, and to increase or decrease the excise duty. Government charge excise duty. If government sees that the company is not earning a lot at that time, they can give the concession. And if the company is earning a lot, at that time government will increase their concession, decrease their concession at that time, and increase the excise duty. In the same way, taxation authority, they use the financial statements for the purpose of assessment of income tax, sale tax, etc., etc. And you will see there are some other users also who will see the financial statement, such as trade associations, consumer organizations, researchers, etc. For the researchers also, this financial statement is beneficial. Okay, in this way we have understood what are the objectives of the preparing financial statement, and what are the income statement, what are the financial statement, and how we can prepare trading account, how we can prepare profit and loss account and balance sheet. What is trading account, what is profit and loss account, and what is balance sheet, we will discuss in the next video step by step. Okay, till then, thank you.